Hello, everybody, and welcome to this fourth session of the ISTAT Learning Lab series. Before we go into today's program, I just wanted to remind you that on the 11th of August, we have Dean Gerber from Oryx Aviation. He's their general counsel. He's going to talk about restructuring of airlines in this pandemic. So that's going to be interesting. And on the 25th of August, Christine Rovelli, who is the treasurer of Finnair, is going to talk about airline liquidity planning in times of crisis. But today, we have Kostya Solotoski with us in the studio, and he's going to talk about implications of COVID-19 on the aircraft manufacturers. And Kostya is uniquely qualified to talk about that because he spent 34 years with Boeing in engineering, in sales, and in finance. And in finance, he was with Boeing Capital, and he was like the ambassador for Boeing in the financial community. And he organized the annual financier and investor conferences that were held in New York and in Hong Kong and in London and Dubai. And he also is the inventor of the CAFMO, the Commercial Air Finance Market Outlook, this tracker of the red and the yellow and the green stuff that is going on around us. Kostya has also developed the insurance market for aircraft finance and is one of the co-founders of AFIC. And today, Kostya is with iFly. Before I hand over to Kostya, and he's going to explain iFly, I just want to remind you that on your screen, on the second little round button at the bottom of your screen, the second from the right, is there are two call-out bubbles, and you can click that, and that will open a window where you can write in questions that we will try to answer at the end of the session. So now, Kostya, over to you to talk about the implications of COVID-19 for OEMs.
Well, thank you, Nils. Very kind introduction. Just to close out, iFly is simply building out a greater capacity for insurance market participation in aircraft finance. But first of all, welcome to the ISTAT Labs, which is a cousin or an expansion of the professional development program that ISTAT initiative to share the learning and the expertise of the industry with a broader ISTAT community. So hopefully you'll be able to join us in this series that Niels talked about for months to come while we continue to social distance. Today's conversation is building on what Nils started last week when he talked about the relevance of cycle and how we analyze implications of cycle on our business. And what I'll do today is, again, expand on that conversation and look at consequences that it's likely to have on aircraft manufacturers and their product strategies and how we go forward and how the current pandemic changes the outlook for how the markets are going to look. So with that, I think most people are familiar with the dynamics of the cycle, the good times, the challenging times, and the opportunities that the downturns create. But also we need to remember that we went through, prior to this pandemic, through about a 10-year, and some could even argue that the financial crisis wasn't a dramatic downturn for aviation. Then you could say that we went through almost a 17-year cycle of strength in the aviation markets. And when you have such a long run of strong performance, people start to debate whether something has fundamentally changed. And clearly COVID-19 reminded us that the world hasn't really changed, the cyclicality is still very much there, and the extremes are still there. So if we look at the history of aviation, there are several things to note about the cycles that we've witnessed in the past. One is that they occur fairly regularly. and sometimes longer periods in between. But the other is that the growth of the industry, despite the cycles, has been extremely predictable. And every time we had a cycle, and every time people talked about this time is going to be worse than what we've seen in the past, and the future is not as good as what we've seen historically, the demand has recovered. And the key to all of this conversation that you always need to come back in measuring the implications of the current cycle and what the future holds is the underlying demand and how you measure it. And as you can see, one of the interesting things on this slide are the orange or yellow lines, and each one of those indicates when an additional billion travelers were added to the global traveling system. And as you can see, those periods for each incremental billion keep getting shorter and shorter. I've also just touched on the fact that we went through, since probably 2010, 2011, an extraordinary run in the industry where we were, the demand, the air travel demand, was growing at meaningfully above trend. And as you can see towards the top of the chart, we're starting to decouple from the long-term trend lines of growth for air travel. And while people started talking about predictable long-term growth, we were reminded the cycle hasn't gone away. The pandemic, there are always different causes for the cycle, and this one is a pandemic, was a more material disruption that we've seen in the short term. And we'll dissect that a little bit to see how it will play out in terms of the recovery and the implications that it will have on the longer term industry consequences. The impact, first of all, on the airlines. You see the profit margins and losses and gains in the earlier years. Several things worth noting. First of all, the losses that the airlines have incurred during this downturn are unprecedented. But it is also worth noting that the era that we had of above trend growth over the last almost decade has generated profitability that also was unprecedented. And airlines were going into this downturn probably in some of their healthiest financial position that we've ever seen historically. So looking a little further to get a perspective on the current downturn relative to what we've seen in the past, the closest thing that we can come to is 9/11. Post 9/11, global air traffic for the year-on-year changes was 8% globally in a decline in traffic. But if you looked at only US had a little over 15% decline in traffic. And the recovery took for quite some time, and you saw a fairly strong rebound, but very weak airline performance, and we had quite a few bankruptcies a number of years after 9/11, primarily concentrated in US. But it was a slow road to recovery, complicated a bit by what we also saw on the tail end of 9/11. We had SARS, so just as the world was starting to get its footing post 9/11, we had SARS, which had a material impact in Asia, but globally was well under 3-4%. But for Asia, it was a decline in demand of about 18%. As I also mentioned, the financial crisis, while significant in the macro economies, was relatively modest impact on new aircraft, but it had a significant impact on used aircraft. New aircraft weathered the storm quite well because the financial crisis coincided with very high fuel prices, and so there was an accelerated need to replace airplanes with more new fuel-efficient airplanes. So when we are going to go back and looking at implications of the current crisis, the best lesson or the best relative downturn would probably be 9/11. In order to look at and analyze and contrast the implications of the current downturn, first of all, it's important to agree what the measurement is. And that's what Nils talked about at length last week when he talked about supply and demand. And this curve, in essence, tracks the growth of demand and subtracts the growth of supply. So the demand are people buying tickets, and supply are new seats, new airplanes being delivered into the market, minus the retirements or the scrapping of the older airplanes. And as you can see that post 9/11, you had a significant recovery. It took about 3 years to get to the really tight market, and then a fairly stable back and forth, but fairly tight markets for about 14, 15 years. But when one looks at the demand and the degree by which the demand declines, it is very important to understand the timeline over which you have a demand decline or acceleration. And who absorbs the demand collapse and at what point? Well, you have, I'll give you a little thought experiment. If we had somebody turn off air travel on January 1, and nobody flew until July 1, and then in July 1, everybody got back on the airplane, then the number of airplanes that you needed in July 1 is exactly the same as what you had on January 1, because same number of flights, same number of people, but you had a year-on-year demand decline of 50%, which is much more than what we've seen in the past downturns. So all of that short-term demand decline was absorbed by the airlines in essence. And that's what we're seeing in the early stages, that the airlines usually are the ones that absorb the bulk of the pain in the demand decline in the short term. And as the lower demand persists in the system, then it starts to shift into aircraft owners or investors and aircraft manufacturers. So let's look at them one by one. So first of all, clearly we were going into a fairly strong market position and very good demand growth over the past almost decade. The other important thing to note is that over the last decade and a half to 2 decades, airlines have done an extraordinary transformation of their businesses. What this chart is showing is the current analysis of airline cost structure, that roughly half of its airlines' global costs are fixed and roughly half of them are variable. And that is a significant shift from where airlines were 15 to 17 years ago. 15 to 17 years ago, roughly 3/4 of airlines' costs were fixed. And as they shifted more to variable cost operation, the airlines started to behave differently, where they started to take out a lot of the capacity. And as we've seen over the last decade, whenever there were various pockets of market softness, we saw very proactive actions by the airlines to reduce capacity and thus not operate airplanes that are relatively empty and burning up a lot of the cost associated with that. The other important thing that is worth noting is the productivity improvement that the airlines achieved over the past decade. Not only have the airlines seen this massive growth in demand being above trend, but the airlines were very good in improving productivity of their fleet, in improving productivity of their yield management, meaning the load factors, the densification of the airplanes. To give you a perspective, that over the same period, Boeing and Airbus delivered a little bit under 7,000 airplanes. And if airlines continued to operate the same way they did 10 years ago, they would have needed another 7,000 airplanes to meet the capacity requirements. So the airlines have done an extraordinary job of becoming more efficient. So that gives them a bit more flexibility, along with their strong balance sheets, to absorb the short-term demand disruption. We also saw unprecedented government engagement in providing aid to help airlines weather the turbulence that the pandemic has created. And this is, I guess, an acknowledgement of global governmental recognition that air transportation network is public transport. And it is the most efficient public transport because it is the one that requires the least amount of subsidization by the governments, and in healthy periods generates a lot of taxes. But that is absorbing the short-term demand decline. So the question is, what does the future hold, and what are the consequences to the other participants in the market? So we now look at, as we have gone in now for 4 or 5 months of much lower demand, and we're seeing that the resolution to the pandemic is not likely to be a V type of here is a vaccine, or here is a magic solution, or virus just disappears. None of these are pragmatic or rational strategic assumptions. So we're looking at pressure points in the system, and how do we see that playing out on people that buy airplanes and people that build airplanes. Past downturns, and primarily 9/11, give us a good sense that if you have a prolonged softness in the market and an overcapacity in the market, that the single aisle, the most ubiquitous aircraft, are likely to see value declines in the range of about 15% and lease rates in the range of 20%. Now, those are interesting numbers because in the past downturns, I've had many debates over beers with friends of whether those numbers really indicate the degree of volatility or the extremes of volatility in aircraft values. Because when you have such a significant shift in aircraft values, what happens is a lot of market participants in the current environment are financially strong entities, and they're not obliged to trade or get rid of their assets in a down market. So what happens and what we've seen consistently in the past several downturns, is people simply sitting on those assets, and so theoretical value may be 15-20% lower, but there's not much trading in those values. So the bid and the ask are quite wide. And I often ask, when people talk about what's the value of a 777 or what's the value of an A330, the question is not what the appraisers are necessarily think that it might trade for, but if you tell me that the value is significantly lower than it was a month ago, the question is, where are you going to get it? Are there people selling it at that price? And in the past downturns, there hasn't been much trading where people said, we know this is going to come back, and I can wait 6-7 months and the value, or a year, and the value is going to be significantly higher, so I will sit this one out. White bodies, being less liquid, have a higher degree of volatility and probably longer holding times. And I'll come back to that point as we start discussing the current environment. But what we've seen is about a 20% decline on the extremes in values, and maybe 25% in lease rates. Much more narrow market, much less liquidity, and much more expensive to transfer aircraft. And consistently, we're starting to see it in this downturn, and we've seen it in every past downturn. People use this as an opportunity to update their fleets, first by accelerating the retirements, and then as you start coming out of the downturn, replacing the retired airplanes with newer equipment. And this chart highlights the fact that the timing is somewhat fortuitous for, you never want pandemic to be fortuitous, but we were approaching a bow wave of retirements both for single aisles and wide bodies. And that bow wave probably will move to the left to the current environment, and you'll see accelerated retirements both in the single aisles and wide bodies. So what does this all mean for our business and the business of aircraft manufacturers and people that buy airplanes? Well, here's where we started the year. First of all, 2019 saw a decline in deliveries that had nothing to do with the underlying demand. That entirely was a consequence of MAX grounding, and so we were planning in 2018 to have around 1,800 deliveries for Boeing and Airbus. And then the grounding of MAX dialed down the 29 delivery by quite a meaningful number. What's interesting is starting this year, most people looking at the industry were saying that we're going to deliver roughly 2,000, a little over 2,000 airplanes between Boeing and Airbus. And Boeing is going to clear out its MAX backlog, so that will add roughly an extra 1,000 deliveries. And then in a traditional normal year, if the 2020 proved to be similar to 2019, we would have seen Boeing and Airbus deliver roughly 1,900 airplanes. Clearly, that's not going to happen. And what we're seeing here is current market forecasts are somewhere around 600 airplanes, plus or minus 100 airplanes, I want to say. Now, I want to go back to the previous slide and compare that to what happened post 9/11. Post 9/11, in the course of 2 years, Boeing and the industry production was lowered by about 30%. Airbus kept its production lines flat, and Boeing cut its production almost 50%. It was like 46, 47%. So Boeing, in essence, served as a shock absorber post 9/11. And then what we're seeing, oops, my apologies, I got to re-navigate this. So when we are talking about going from an anticipated 1,900 to 2,000 deliveries this year to 600 or so this year, instead of not over 2 years, what manufacturers are doing is truly extraordinary and unprecedented. We're talking about deliveries that are 70% or more less than we were planning at the start of the year. So that sort of proactive action, some of it by choice, some of it by circumstance, is very significant in terms of reducing capacity growth in the market relative to past downturns. An interesting question comes up in all of these conversations is, but wait a second, Boeing and Airbus have historically high backlogs. How does that play out? And it's an interesting and again, different behavior than what we've seen in the past downturns and certainly past 9/11. What post 9/11, Boeing and Airbus continued to deliver a lot of airplanes and could gradually reduce production over multiple years rather than relatively instantaneously. Even though there were airlines post 9/11 that said, look, we're not taking any airplanes, Boeing and Airbus found ways to work with the airlines and lessors to get them the financing, to get essentially, at the time I remember we were calling it sharing the pain, that everybody takes a bit of pain, the airlines, the lessors, the manufacturers. Here, things are happening a lot faster. So looking at these backlogs, one would say that in essence, it is a very big pool of very expensive options. Because clearly the backlog is being rejiggered. It will not simply be delivered because it was contracted. And we will get to find out, as Warren Buffett used the phrase, when the tide is coming out, who was swimming without trunks, because PDPs, the pre-delivery payments that the airlines pay on their contracts to secure the positions for deliveries, are a very important negotiating element in when and how the pain is shared for future deliveries. And so, since Boeing was the only manufacturer that was cutting production post 9/11, and it had very strong pre-delivery payment schedules, it was able to do it much more gradually than what we're seeing in the current environment. So it'll be interesting to see how those backlogs look over a longer term. Backlogs matter a lot to manufacturers, but I'm not sure they are a good indicator of long-term deliverability of demand. The real indicator of demand and manufacturers' production is our deliveries. And deliveries, I do believe, are going to come down very quickly, and we'll see how it's rejiggered in the next years, in the years to come, the year 2, year 3. Will depend on genuine demand coming back to the in terms of traffic. Okay. Now, when you see such monumental changes to the market that are happening relatively quickly, you have to also reassess, are the current products positioned in a similar way, or will there be some products that strengthen and some products that weaken due to the dynamics that we're seeing? And the only reason I'm putting this chart up is this is a Boeing 20-year forecast, and it highlights the replacement. And so going in during a healthy market, Boeing was anticipating that the replacement deliveries representing replacements will run roughly 40-45%. And it would vary geographically and would vary by different periods in time. And so I think what we will see in the near term is that the replacement will play a much, much bigger role. And I would not be surprised in some markets to see replacement represent 70 or 80% of the deliveries. If we look at same data from both Boeing and Airbus, this is a 20-year outlook, and Boeing and Airbus pretty much agree on the demand, and this was their view at the end of 2019. I don't anticipate material changes because over 20-year horizon, as I've showed you early on in this presentation, you can have significant market dislocations, but the trend line usually recovers, and the question is over what period does it recover? Whether it recovers over a period of 2 years or 4 years is not going to significantly change how we see the 20-year outlook. And so number of wide bodies and narrow bodies, that's the area that I think will be interesting, and I'll talk more about in a second. This is a very important chart in thinking about the current product strategies and how we see the recovery occurring. So even before the pandemic, we saw that stage lengths were getting longer, and there were several reasons for that. One is the evolution and the value of point-to-point service, and having airplanes like the 787 and A350-900 being good point-to-point airplanes and replacing in a lot of markets or opening up new markets that were served by bigger airplanes like the 47s or 380s or the 777s or the 340s. The other important component is a lot of range capability was added to the new versions of the 737 and the 320 family, and even in the regional jet families. And so we saw pre-COVID a growth in stage lengths, and as COVID hit, everything got much more regional. Now, IATA forecasts this very slow recovery in the wide bodies, and I think they are being optimistic. I do believe that the trend that we were seeing even before the pandemic, that you have a significant faster growth in the single aisle markets, more regional markets, and slower growth relative to norm in the long haul markets. The single aisle airplanes are now regularly crossing the Atlantic, so it's hard to say that that's a regional market. So the additional capabilities of those airplanes are adding to that, but also the economic drivers. Yeah, 2 single aisles with the same capacity of 1 wide body are economically more efficient. And so you're going to see that trend just like you used to have in the U.S. domestic system, a lot of wide-body airplanes, and now there are almost none. You still have a lot of wide-body capacity in Asia, where single aisles can continue to start serving those markets. So that trend, I believe, of shifting or having faster growth in the single-aisle markets and slower growth in the wide-body markets is going to be prolonged and exacerbated a bit by the pandemic. So looking at manufacturers' product offerings, walking through one by one for each of the manufacturers. A220 family. Love the airplane, great airplane. Airbus has done a tremendous job of energizing the program and creating new customers, which means liquidity. And then pandemic hit. And that's a problem. So coming into just prior to the pandemic, A220 looked like it was getting a momentum of building a customer base. If that momentum is not sustained over the next 2-3 years, which is what we think this recovery is going to take, and in some instances, in some markets, 4 years, then you start to question that when you come out of the pandemic, does 220 have long-term viability? Because by that time, it is getting to be a mature program with a relatively narrow customer base. And, Airbus talked about the fact that the airplane probably will be losing money through 2025 on a per unit basis, and then it starts becoming profitable. That's a tough thing to sustain through the pandemic, especially if you have lower production rates. So watch and see on that airplane. It'll be interesting to see how this evolves. A320 family, clearly the strongest airplanes in the market right now in terms of liquidity and investment desirability. A320 and A321 are the most preferred airplanes among the lessors, ubiquity of customers, so that strength will continue. The interesting dynamic to watch with the A320 and A321 is Airbus has certainly been articulating a view of small airplanes getting bigger, and which has clearly been the trend. The question is, do they get as big as what 321 is, and that a large share of that segment of the market is going to be in the 321s relative to the 320s. In the current environment, when you're going to have a softer demand, there may be some reversion towards optimal sizing between markets, so the 320 may become or continue to be the dominant airplane in the family. That's a space to watch. But today, clearly, 320 and 321 are the preferred single-aisle airplanes. A330 family, tough story. You had a lot of ubiquity and liquidity in the 330, 200, and 300, but that market has gone soft even before you had the pandemic, in large part because you had a lot of A350s and a lot of 787s coming in, which are the next generation of technology in a similar size. And it's very difficult to price differentiate similar sized airplanes when they have such meaningfully different economics. So that's a tough trade. The A330neo was getting a lot of momentum again just prior to downturn. And so a bit like the 220 discussion, if it is not able to gain or sustain the momentum that it had pre-pandemic, coming out of pandemic, it will be a tough story because by that time it will be quite a mature program with a very limited operator and customer base. So that one is a watch item. 330-200 freighter, great market. Freighter market has been doing well. The airplane is a good airplane as a freighter, but had a difficult time competing with the ubiquity of used converted 767s because they were significantly cheaper. So a nice freighter long term, but again, a relatively modest market. A350, strongest member of Airbus's wide-body family with some strength coming up. 900 clearly is the preferred airplane in the family, but 1000 was starting to gain momentum prior to the downturn, and we'll see whether that momentum can be sustained. And the big airplanes clearly are done. The 380 and the 47 future, the risks associated with them relative to the narrowness of the customer base makes it a relatively boutique solution rather than a broad market solution. Walking through the Boeing lineup, Max family, clearly also a ubiquitous family, but Max clearly had some turbulence over the past year. Economically and performance-wise, Max 8 is a strong airplane and will be for many years to come. But here you have similar discussion that I had around 320 and 321. If the market resizes or slows the growth towards the bigger single-aisle airplanes, that would favor the Max 8 and the Max family, because Max 8 is a little bit bigger than the A320. If the market continues to grow at a clip that it has been before the pandemic in the single aisles, then the 321 is in an advantageous position, because 9 and 10, while are good airplanes, are too close together, and they tend to fragment the upper end of the Boeing single aisle offering. The other challenge that Boeing will have to demonstrate to the market is implications of market share. Clearly, when you take a year off from deliveries, and given the cancellations that we've seen, the market will have to readjust to different market share from a 50-50 split that you had. And so the question will be going forward, what does that mean in values and ability to see the stability of residual values and liquidity in the airplane. 787, so 787-9 is clearly the best wide-body investment and preferred airplane in the wide-body family. Dash 8 is a more narrow but clearly liked option. You have an example of American Airlines taking a lot of airplanes, so a lot of efficiency there and opportunity. And Dash 10 was just getting started when the pandemic hit. Now, Dash 10 is an interesting animal because it is not intended to be a very long-haul airplane. It is intended to be more regional operations. So it will be worth looking at, is it impacted like other long-haul markets in terms of slower growth, or will it continue to evolve its market position? 777-200s at LRs and 300ERs, pretty much wrapping up that production, but it will be the mainstay of the global fleet because it's just such a large base for the 300ERs. And the LR was a boutique product, relatively unique solutions, a lot of capability, but a narrow customer base. 777X, boy, that timing is not good. Wonderful airplane. The 777-9 is going to be, for decades to come, the largest airplane in the global fleets, with retirements of the 380 and the 47 programs. 777-9 is going to be the largest airplane, but the world is kind of saying long haul is not an attractive space to be in right now through the pandemic. So that slows down the need and the adoption for 777-9, and when that happens. Long-term, wonderful opportunity. Short-term, wait and see. 777-8, tough story. Boeing sized the airplane right up with a 350-1000, which has a much lower weight, but also has much less capability. And so the challenge for Boeing and Airbus is 777-8, another 777-200LR, or will it be different? Will people be willing to pay for a lot of that capability if they use it only on a small portion of the routes? Is it a unique capability for some markets and is not as necessary in broad broad demand? It will also depend on what Airbus does with A350-1000. Airbus has added a lot of capability over time to what A350-1000 can do, as reflected by Qantas selecting for their double Sunrise product the A350-1000, which I think 777-8 was tailored, designed for a couple of other markets, but Qantas clearly was one of them. So that dynamic, 777-8 versus A350-1000, will be interesting to watch in years to come. 747-8, it's retiring. Great history, but big airplanes are tough to justify because you have smaller airplanes with the seat mile economics that are similar, if not better, with much lower risk of having to fill a big airplane. And then the freighter market here, Boeing owns the space. They have clearly the broadest offering of market-preferred freighters, but it's a relatively modest market in the grand scheme of things relative to the passenger market. All right. Embraer, and similar to the conversation that I had about A220, big fan of what Embraer has done with the airplanes. E2s are wonderful airplanes from a capability standpoint, from customer preference and how you feel about the airplane, but the airplane hasn't been selling well even prior to the downturn. That market is in a pretty difficult place. So again, the challenge will be for Embraer to populate or seed the market to create that liquidity of opportunity for E2s to be a credible airplane, because waiting for another 3 to 4 years to build momentum on the customer base may be problematic in terms of long-term values and market acceptance. The other thing that comes up very often in our conversations about longer-term products and what will be available and competitive pressures are the three newcomers to the market: the Chinese, the Japanese, and the Russians. Those of you that have shared beverages with me know that I am a skeptic that any of these programs will be relevant in our working lives. And I include many of the younger participants on this call. Simply looking at what it takes to be a great or a successful or even relevant manufacturer globally, like Boeing and like Airbus, and where Embraer is going, it is a really, really tough combination of a lot of things that have to work in synchronization with a lot of innovation, with a lot of infrastructure, with a lot of experience, a lot of capability, a complicated supply chain engineering, certification, and on and on and on. I am skeptical that any of the three participants have the ingredients to get there. So I am pretty relaxed that you may have all of them, well, maybe the Russians and the Chinese rely on the domestic market, but I'm skeptical that that will be relevant. You had a perfect example of a Soviet system that was entirely a captive market, and that did not produce a viable product. And the minute the market opened up to the outside world, the entire product line collapsed. Mitsubishi clearly took a very long time, and so by the time the airplane starts entering the market, it would have been a pretty mature design for a long time. So tough story for all of them, I think. Plenty of money out there before the downturn, and I am quite bullish that there will be plenty going forward. Once people fully recognize that aviation is not going away, it's an integral part of the infrastructure, you will see the liquidity in the space. What we talked about, you have the insurance markets coming in, the bank markets will continue, capital markets clearly recognize that if you have to have a key infrastructure that is really like a utility, the money will be there. The question is at what price. In the short term, it will be probably more expensive. In the longer term, it will come back to being quite affordable. I've taken the Boeing CAFMO stoplight chart and then modified for the 2020 some of the colors. The money is there, it's just it's more expensive. You have some pressure points in the ABS markets, export credits. Clearly, this is their season to play, but overall, I think it's there. You're not going to create new markets in the current environment. That's why it's red, but overall, it's manageable. One by one, the bank market initially was mostly closed. Now we're starting to see people come back and bid on deals. It's clearly more expensive, but longer term, there will be regulatory pressures. The Basel regulatory environment is not conducive to long-term asset-based financing. So it's a shrinking market, but still meaningful and will continue to be meaningful for at least the next 5 to 10 years. Capital markets, I mentioned the ABS. There's some pressure points there, but there's also a lot of appetite. If there was EETC capacity, there's no doubt in my mind that there will be availability of liquidity. So that market is open, but more expensive. Lessors also doing well as businesses. They've provisioned themselves. They have extraordinarily strong balance sheets, but they got pounded by the equity markets and their cost of debt skyrocketed, but now has started tightening up again. So it's coming back. Reason is starting to prevail. So where are we going from this? Not going to go through this, but I think most people recognize that aviation is a key global infrastructure. And just like nobody's discussing trains going away or buses going away, aviation is not going away. There will be different way that we operate those networks, including trains, including buses, and those changes will happen. But this is a utility that is integral to the macroeconomic and macro-social system that we live in. Aviation is still in its kindergarten stage. Most people on the planet haven't started flying yet. So you have this chart showing incomes on the horizontal axis and frequency of flights on vertical axis, and it's a logarithmic scale. So you have rich countries there where people take 2-3 trips per year, and then you have countries that are just emerging like China and India where per capita, you have far fewer than 1 or 1/10 of a trip per year. So as those economies gain their footing, you will have a transformative number of people that are entering the flying phase of social and human activity. And, you know, this downturn, while every downturn is different, one thing that remains the same, there are a lot of smart people that say, you know, this time it's different. And there's some good reasons. There are very thoughtful people that say, you know, this time it's going to be different. Whether the fear of contagion or in the past it was fear of terrorism or a hassle factor of dealing with the security or the implications of the environment or video conferencing, all of these are good reasons. And all of them have proven to be inaccurate in the past downturns of how the industry has demonstrated its resilience and its recovery. Reality says that as an integral part of human infrastructure, aviation will come back. It will be different, but it will come back, and it will come back to the trend lines. When I try to visualize how that may happen, I remind people that when we were in the post 9/11 world, I'll be honest, I was one of the people that was in the middle of that crisis thinking that aviation will never be the same, that people will be afraid to fly, and they may have selected the wrong industry to be in. I remember Alan Mullally saying a week later that we are facing an existential crisis, and whether we come out of it or not is not certain. And when you hear somebody as optimistic as Alan Mullally say something like this, you kind of go, boy, this is tough. And in the end, things happen that we didn't anticipate, and things happen that we thought were crazy that we take for granted now. People talked about bulletproof doors. People talked about arming, canine, the different types of screening the TSA was going to implement. All of this stuff looked unfathomable at the time, and now it's one of those norms that we accept, and as we do taxes and many other things. So it became part of the infrastructure. So there's no doubt in my mind, and I'm seeing that in talking to some of the airlines, some of the initiatives from A4A, from IATA, that we will develop a medical safety infrastructure, just like we've created a security safety infrastructure. And I don't know whether it will be thermometers or booths or isolation. I don't know. But I know that there will be a lot of ingenuity that when we look 5 years from now and look back, we'll be living in a different world, but the flight will return to its trend lines, and we will all adjust with it. And so the question now is, first of all, manage the current downturn. And I think a lot of people, market participants, are doing extraordinary things. If you look at the airlines and how they managed, I've talked about absorption without the collapse, extraordinary. What manufacturers are doing, staggering, trying to manage such a material demand decline and uncertainty of how the recovery is going to look. What lessors are doing, what people that are holding the portfolios are doing, quite extraordinary. So I am bullish that we are, been able to hold through the first phase of the demand collapse, and are now starting to look at how do we navigate the recovery that probably will be somewhere in the neighborhood of 3 to 4 years, similar maybe for the regional single aisle markets to what we saw post 9/11, and maybe a little bit longer for long haul markets, wide body markets, maybe 3.5 or 4 years even. So with that, I will thank everybody for patience in listening through these perspectives, and certainly happy to see if there are any questions, disagreements. As many of you know, I love to debate these topics. We're in a wonderful space where there are a lot of legitimate other perspectives. So with that, Nils, are there any questions trickling in out there?
There are a bunch of questions, Kostya, so
excellent.
Don't relax just yet. So the first question is from Nico Buchholz. And he's asking if Boeing's backlog is not at risk, regardless of PDPs having been paid in. And the reason would be that maybe some of the MAX contracts can be terminated because of the delays.
Hi, Nico. Great to hear from you. Thank you. I would say I wouldn't differentiate Boeing backlog or Airbus backlog. I've learned one thing, or I've taken to heart one lesson that I found useful. Long time ago, we were in a difficult negotiation with one particular customer. And Dick Albrecht, who was at the time head of sales and head of chief revenue officer for Boeing Commercial, we were talking, and he said, at the end of the day, we do not want to deliver a single airplane to a customer that does not need that airplane or cannot use that airplane. And so how we restructure that has economic consequences on us and the customer, and we have to find a logical way through it. And so I would come back and say, Airbus has over 150 airplanes that are parked, not being delivered. They're contractually obligated, the customers, to take those airplanes, but something is happening. And so because you really have only 2 or 3 suppliers of these airplanes, you don't want to permanently ruin the relationship with half the market. If you are ripping up and causing irreparable harm with one of the manufacturers. And manufacturers clearly don't want to destroy a relatively small customer base. So I would view that there will be some very, very difficult conversations, and the pain will have to be shared. And each one of these resolutions will be unique. There's no question in my mind that each customer negotiation will be unique. Simply canceling MAXes may be an easy opt-out for a few customers, but long-term, it will not serve them well. So I think Boeing and Airbus are not in too different of a position in sorting out these challenging times.
Right. So a follow-on question to that is from Paul Layton. He says there are more than 50 new 787s parked around Seattle and Charleston. Mm-hmm. And the customers are just not taking delivery and not accepting the aircraft. So would Boeing sell unwanted aircraft? I guess this goes for Airbus as well, in the short term, and at what price would they sell those airplanes?
Well, I can't speak for Boeing or Airbus, but first of all, hello, Paul. Thank you for the question. Unprecedented time. Both Boeing and Airbus have a lot of airplanes that have not been delivered and should have been delivered. Airbus experimented with a mini auction for 5 A320s. I can't imagine that that's a solution going forward of creating auctions for unwanted airplanes. So first of all, the answer is going to be on a case-by-case basis and how that pain is shared for the specific customers that have ordered those airplanes. Second of all, both Boeing and Airbus have the wherewithal financially to weather this storm and figure out how do we navigate the next year, 2 years, and manage these issues in a sensible way for the industry. No question in my mind that both are financially in a very strong position to do that. And so it will be, I think, defined as a collection of individual negotiations rather than we're going to have a big auction and see what happens. That does not seem to make sense to me. But I don't think there is a clear answer either within Boeing or Airbus. I think it's more of a collective individual cases that will, in 3 to 4 months, will make it evident to all of us how this is being sorted. And my guess is it will be longer term solution rather than a big defining moment.
But do you think that Airbus and Boeing will be in a position to help out with financing of these surplus aircraft?
I believe they will be, and B, I don't think they will need to. And I'll talk about both of those. So one is when I talk about shared pain, I mean, one of the things that we created post 9/11 was an extraordinary, we jokingly called it a park and ride facility, where you delivered an airplane, you created the financing where the financiers recognized that this airplane will not be operated for the next 6 months, 9 months, whatever that period is. And so if we could have done it in 9/11, we certainly can do it now, and we can certainly do it in a much bigger scale because the aircraft finance markets are much more mature and are much, much deeper. So whether we as the industry create this enormous facility for new airplanes that are unquestionably will be needed, and how the people that have ordered those airplanes participate in those facilities remains to be seen. And that's what I was alluding to, that contractually it will be negotiated case-by-case basis, but then collectively it will start being apparent that, hey, we ought to experiment with such and such structure that could have significant scale for a lot of airplanes to be in. Finance markets, if you look at the market that I am trying to expand, insurance markets, if you look at the capital markets, export credit, they're not particularly busy right now. So that tells me that for now, the airlines are saying we just rather not take it. But that's not a solution that I would call a shared pain solution. That's just saying I'm just dealing with my own reality. But it has to be a collective industry solution, and Boeing and Airbus will ensure that that conversation takes place. And when there is that broader view of how we're coming out of the pandemic, then I think you'll see export credit agencies start getting cranked up. But when I see today that the export credit agencies are not nearly as busy as they've been post 9/11, that tells me there's not going to be a lot of pressure on manufacturers.
Okay. All right. So now you said you couldn't speak for Boeing or Airbus, but Douglas Runte is giving you an out here because he's saying, imagine now in a thought experiment that you are appointed the CEO and sole proprietor of Boeing. Okay. What would be your product strategy for the product line? What is the clean sheet NMA announced by the new CEO? What about if you had the same position at Airbus, CEO and sole proprietor?
Mm-hmm. And I think hi Doug, thanks for the question, always a thoughtful one. I think I answered that when I went through the product strategies. By not talking about NMA, I didn't see that as a credible program in the foreseeable future. Simply just looking at reality of what it costs to do a program and looking at the number of things that Boeing and Airbus have to deal with, launching airplane programs is not going to be front of mind. I think that there is a possibility of it would make sense to me to launch a 777 freighter, but that's a relatively small step because that was always intended, and so 777 has much of the engineering and the strategy in place. In the near term, clearly the freighter market is going to be a very desirable market. So 777 freighter in the near term, if I was a CEO of Boeing, would make a world of sense to me. If I was a CEO and sole proprietor of Airbus, boy, that's scary. That's a lot of help from the European government. Says, oh, so you said sole, so we'll see. But for Airbus, they've got a good thing going, and they need to sort out whether the 220 stays as part of the family. That's a tough choice, and I like the airplane, but being able to develop that market in a current environment is quite a challenge. 320, 321 strong families, and what they do with 1000, if I was the proprietor, to me that would be important. So, and for Boeing, again, I think I talked through what I would be doing or my perspective. Whether Boeing and Airbus share that, probably they don't. That's why it makes for good debates. But both have very good platforms.
Okay. So Doug has another question. How do you think values / lease rates of 737 NGs and 320 CEOs will be affected by the introduction of their successors? Will it be better or worse than when the classics, 737 classics, were introduced? What happened to them after the introduction of the 737 NG?
This one is a toughie, and I would say I'd have to vote with worse. And my thinking on that is that, first of all of the out-of-production aircraft residual values suffer disproportionately relative to their replacements in production airplanes. And they usually don't recover as well, or don't recover, period. Now here you have early stages of replacement airplanes, the Neos and the Maxes. But compounding the problem is what we talked about in the previous discussion, that you have a pretty big buildup of, well, I hate to use the word whitetail because all my years at Boeing has been eradicated from my vocabulary, but you in essence have a lot of airplanes that do not necessarily have a clear home. And so how that is sorted, and the fact that there is so much of that capacity, it has to put a pressure on the previous generation airplanes, which are NGs and the older generation 320s. So I would lean more in that it would be a disproportionate value impact relative to the in-production aircraft.
Okay. Now, Doug still has you as the CEO and sole proprietor of Boeing, and Airbus, actually. So over the life of the A321 CEO, it outsold the 737-900ER by a factor 3 to 1. What do you think the ratio will be between the 321 Neo and the MAX 10 over the next 10 years? And will MAX 9 be in production in 5 years from now?
Oh, look, Nils, we ran out of time. Unfortunately, I'll have to answer that question.
No, we still have time to go.
No, I think we're out of time. But no, it's right now. I think it's a fool's errand because I do believe that there will be a rejiggering of the growth of the single aisle airplanes. And so we don't have enough data to be second guessing that market. So let's wait and see. The backlog indicates that 320 is clearly the dominant and the most preferred airplane. Even though 321 has a great run, the backlog says 320 is the dominant airplane. And for Boeing, MAX 8 is clearly the dominant airplane. And so how that unfolds in the pandemic world and post, stay tuned. And on that, I think we will try to stay to our timeline. So thank you all, and please do tune in to these labs. A lot of good material to cover by people that have good perspectives. So I hope you all enjoyed it, and have a good day. Thank you, Nils.
Thank you, Kostya. Thanks, everybody.